The highly anticipated results for the 25-year bond, the 15-year bond, and the 5-year bond in the March 18th auction are finally out. But before we even go to the results, I want to show you something. Now, we know after the elections on January 15th, 2025, 2026, Bank of Uganda and the Minister of Finance, they started an aggressive push to make sure interest rates come down. Interest rates in 2025 for all the different tenors, the yield curve was rising every single day, and interest rates were reaching as high as 17.95%. The 25-year bond, the last time it auctioned off in November 2025, it brought in a yield of 17.95%. So as soon as the election came down, that premium because of the election came down. The government had front loaded the majority of the bids they wanted. They started an aggressive push for yields to come down across the different tenors, and we saw it on January 2022, January 22nd, when they sold off the 15-year bond, bringing in a 16.475. We saw it in Feb, the Feb auction, where the 20-year bond was auctioned off and it brought in a 15.49% yield, and the 10-year bond brought in an almost 13% premium. So the March auction was highly anticipated for two reasons. The first one is it came in at a time when the Iran war had just started, and when you could see in the secondary market the interest rates had started rising. You see, between Jan to March, the beginning of March, interest rates were just falling. Then the Iran war starts. There is that repricing of every transactions in the country and the trades and everything. Then interest rates start rising in the secondary market, and the banks at that time were even asking for yields of 16.5% for the 25-year bond. So when this auction came in, there was an anticipation that maybe the Iran war might significantly have an impact to the treasury bonds yields, and maybe we see a pushback in rates coming back above 16.5%. And sorry to us, when the results came out today, you can see, and I'm going to focus so much on the 25-year bond and the 15-year bond. The 25-year bond brought in a 16.29%. Now, 16.29% is a very good interest rate. That means we are paying a very, very small premium. There is literally no premium. But when you compare that with the November, the last time that bond was auctioned off in November, right? You can see it had a 17.95%, and this was a data price. At that time in November, it had close to 100 plus days of accrued interest in it. This one, this time round, it has what? Less than 30, 40 days or 45 days of accrued interest in it. For a fact that it's coming in at 100 at par is a very, very good thing. So that's a very good takeaway for the 25-year bond. But it's better, I assure you. If it wasn't for the Iran war, maybe the results would have been a little bit different. Before the Iran war, the last week of February, the 25-year bond was trading at 15.5, 15.7%. Getting a 16.29%, it's a good win. The 15-year bond, it's coming in at 15.75%. Now, the people who went for the 15-year bond are going to get to pay around a 3% premium. That is not bad. It's not bad. That's amount you can recover when it pays a coupon again in July, on July 9th. You will recover that. It's the 10-year bond in a month ago, people paid a 13% premium. This is just a 3% premium, so it's not bad. But when you compare that with when it last auctioned off in Jan 22nd, it had a coupon, it had a yield of 16.475%, and it had a discount of 4%. So what you end up having to see is that interest rates are falling down. Whether we like it or not, interest rates are coming down aggressively. And one most important thing that from this auction is in this. When you look at the results close to amount tendered, the 25-year bond attracted almost 1.35 trillion of tenders. And of that, government only accepted around 416 billion. That means they left out close to 900 billion. They rejected it. That's a lot of money out there in the market that is going to be chasing the little amount of deals that were released. So you expect interest rates in the secondary market to come down. Right now, I've been trying to trade for one for a client of mine for the 25-year bond, and the closest I'm getting one day, actually not 0 day before the interest rates after the results come out, and the best we are getting is a 15.9% yield. So for those of you who missed out on the auction, yes, the rates are coming down and they're coming down significantly. And so if you for those who are looking for the 25-year bond, the best maybe you might get is 15.9. For those who are looking for the 20-year bond, your best you're going to get is 15.7. For those who are looking for the 15-year bond, the best you're going to get is 15.6. It's going to be between 15.5 to 15.9 for those 15-year bond, 20-year bond, and 25-year bond, which is pretty good. I'm not saying it's not bad, but you can see they rejected almost 900 billion. That 900 billion is going to look for certain deals to buy off now. But the bigger pain is in the 15-year bond. The 15-year bond attracted a 598 billion in tenders. That's close to 600 billion. And Bank of Uganda only accepted 20 billion. That means they rejected close to 570 billion. Actually, 500, 578 billion. All of it rejected. That's a lot of money left on the table. That means the government, the people at the Ministry of Finance in the debt office and the Bank of Uganda, they are doing everything humanly possible to make sure interest rates come down to the levels they are supposed to be, even at a time when you do expect there is an economic pain that we should push interest rates up, that should push interest rates for the 15-year, for the long-term bonds up above, back into the 16.5% and above. The government is doing whatever it can at a time when there is significant liquidity into the market. Now, it will be crazy for me not to talk about Andrew's position a month and a half ago. At a time when the government can want to tender 1.4 trillion and gets double that money in, the government offers 1.4 trillion and it gets tenders of almost double that money, close to 2.8 trillion. That means our treasury bond market is not in any crisis anytime in the short to medium term, because it means the appetite for the government's treasury bonds is there, especially from the biggest market makers, the banks, the insurance companies, the pension funds. It means they still have trust in the government that they can bid for 1.3 trillion. Majority of it came from the competitive bids. You can see the competitive bids, which are the market makers. It's 1.3 trillion for a 25-year bond, which is going to go until 2050. That is trust in the economy, that is trust in the country. And by the fact that they are rejecting almost um, out of the 2.8, they only accepted around 900 billion. That means they rejected close to 2 trillion UGX. That amount, even if they needed the money in the next month, that money will still be here in the liquidity market in the economy for the government to raise and tap into. So that's something that you'd want to understand, that for as long as there is still significant desire from the market makers, from the pension funds, from the offshore investors to invest in the government's treasury bonds, then there is not a single risk to the treasury bond market in Uganda right now. Zero, nothing. So anyone who tells you about that, they do not understand how the rollovers work and everything. And you can see for the 2-year bond, the government only accepted around 280 billion. For the 5-year bond, around 200 billion. You see, and majority of what they accepted is 400 billion. It's in the 25-year bond, which makes that the liquidity position is pushed to the long-term position, not in the short-term maturing positions as we tend to see, because if majority of your bonds are maturing in the short to medium term, you create a liquidity crisis, and the government is pushing more and more of its debt in 20-year bond, 15-year bond, and 25-year bond. But the 15-year bond having that significant rejections, that means the government is deliberately pushing the interest rates to come down. You can imagine how much was rejected from the different market makers, especially knowing that right now the market is getting attractive for them. So for anyone who is trying to look for a treasury bond, whether you're looking for a 15-year bond, a 10-year bond, a 25-year bond, a 20-year bond, know this and such that you can make a better investment decision. The 10-year bond is at a premium of almost 10% plus. So when you are looking for those medium-term bonds, 10-year bonds, that might be a bond that you might not want to go for. The 15-year bond right now, after today's results that brought in at the 15.75%, you can get it at 16.75% in the secondary market. And that's good because it's you're not losing that much if you missed out on the primary market. In 1 or 2 days, rates will start readjusting. For the 25-year bond, you're going to get it between a 15.7 to 15.9. I have it at 15.9 for anyone who is looking for it, and 15.9%, it means you're going to pay a premium of around 2%. That helps you to lock in a very good rate for a long term. For the 20-year bond, it's you're going to get it between 15.5 to 15.8%. I have it for 15.75%, which means you get a discount of 1%. And why are you getting a discount on the 20-year bond, but you're not getting it on the 25-year bond? It's because they have a different coupon rate. For those of you who have started paying attention and understanding how treasury bonds work, the higher the coupon rate, it somehow always impacts the price you end up paying. That's why the people who are buying the 10-year bond, it has a coupon rate of 16.25%. Then that's why they're paying a premium. Now, the March auction is done. We're going for the April auction, which we shall see how the results will come in. Will they be better than this? Will the Iran war continue to have an impact on the interest rates? Or will the government is continue push to have interest rates come down? Will it be a success? I know this was a plan they had in plan since last between October last year, and they're executing it very well. They have got a little bit of a pushback in this auction compared it to the Feb auction, and they're going to go continue trying to push for that by the time we enter into the financial year 2026-2027, and by the time the budget is passed. Those are the things you want to pay attention to. So if you are looking for treasury bond on the secondary market, reach out and we see what we can get for you.